Hello guys, I got this advertisement. I don't know from where it comes. So today, as usual, we try to continue our presentations about the earnings this week, because I just want to begin with this subject this week because it's the events that we see always, and okay, and I see that today we have seen Apple, as you might see, and I have made some videos on YouTube, and we have spoken yesterday about Apple at night, and today we will see Apple in the chart, and we can go and speak about it. And as you might know, I have explained yesterday how Apple, just after the close, after few minutes, it go up into the first phase, and then we have the second phase where the stock will be going up little by little. But the first phase, I told you, it's very quick, because there are a lot of hundreds of thousands of people are just waiting to hear some news. And yesterday, as I see, for me, I didn't see what do they say, because I bought Apple before. So now why I buy Apple before? It's not because of the earning news that I bought the stock. I bought the stock before because we have a trend. And as you might know, I am generally a swing trader. It means I follow trends in the market. When I find a good stock, it's trending, I have my own techniques to begin from the first day, as my strategy says, and I go with it. And usually when there is a gap up, most of the time I sell. If this gap up, it is very small, it means it is not a good percentage, like 1% or 2%. Most of the time I don't sell, because there is nothing to be sold. Okay, I don't get that much money. But understand, guys, that I follow the trend. It means I have bought Apple weeks ago. So since I am following the trend, when I see a gap up and it's a lot of money, I sell. So today in the morning, at the open, I check Apple at the morning. I see it was going down, and after a few minutes, I sold my shares, and then it goes down really, but then it goes up again. Okay, I will show you the chart in a few minutes, and we can deal with that. Okay, so today it happened the same for Facebook, but with a lot of phases. Today we see the phase 1, we see the phase 2, we see phase 3, phase 4. It means it was so volatile. Facebook today, it is not. Well, we don't say hello, Samaradi 83. How are you? Thank you very much for coming. So as I told you, Facebook today. Yes, I bought it also. I bought Apple and Facebook. It means Apple and Facebook I follow them and I bought them in times a long time ago. But Facebook and Apple, it has been 2 or 3 months where I stopped buying them. I bought them just 2 or 3 weeks ago. I bought Facebook and Apple, and I bought Twitter, but I sold it. And tomorrow, if God wills, in the morning, I will sell Facebook if things will be good. You said Apple is not a good gap. Yes, listen, it's not a good gap, but they say that the EPS is not that much. It means they don't say a lot of good things about Apple. I don't know even why we have a gap up. Okay, so it's not really a big deal. But understand that no, listen, Facebook, you say Facebook beginning of a new trend. No, Facebook has the trend before. I bought it before with Apple at the beginning of the trend, not now. Okay, it might be going up, it might go down, this I don't know. So for me, I sold my shares for Apple today in the morning, and tomorrow I will sell Facebook. If it shows a strong thing, I will stay a little bit. If not, I will sell. You say it could Facebook, it could double. Apple is slowing in China. No, listen, in China, understand. I will, since you are speaking about Apple and then you speak about China. Listen, the news have nothing to do with China or fundamentals of the company. It has nothing to do. The news, it is the traders who form an idea and then they buy either heavily according to what they get. Okay? So, no, I didn't. You said, did you play Facebook options? No, I bought shares. Okay? I didn't buy options. Now, because options, if you buy one option, it could be $900 or $1,000. So if you buy 5 or 7 or 10 options contracts, and if it is gap down, you lose 10,000 or 5,000. So options are very expensive. It is cheap when you buy one, but if you buy a lot, it will be expensive. And I don't play this game with earnings. Oh no! Listen. When I follow trends, most of the time I don't follow what the people say or politicians say. I follow the price. Okay? So you don't need to follow you get a lot of information and you think with this information you can make money. You can't make money with this information. Because the news, it could be good, it could be bad. It has nothing to do with politics or with company officials or so. So it depends on what is your strategy. How do you buy stocks? Okay? And this is the most important thing. What is your strategy? What are your techniques that you use? Okay? It's not because China, slow down China, Apple will not go up. No, it has nothing to do with that. Okay? Here we are speaking about earnings. Earnings, it is the news that comes and how the trader will react. Yesterday, I have explained a lot about... you say Facebook is a big disruption. Media are. Yes, but listen. Sometimes there is no news. So how do you trade? Are you waiting until there is news and then you trade? You can't. So what you are looking for is, you are looking for information about the company, and then you make your mind to buy or sell. No, for me, no. I don't use fundamentals. Oh, you said angry about them? Who knows where the stock would go? Yes, this depends on you. If you don't want to risk your money, don't buy. This is as simple as that. But you should have a strategy. For my strategies go, and my techniques, I don't use news, I don't use fundamentals to trade. Okay, so I don't follow the news. When you say, for example, Apple has problem or a slowdown in China, or this is not a way to do business like I do. Okay. Yes. You say, I know, I don't care about the company. Most important is stock where it goes. Yes. Now, for me, in general, I follow the trend. Where it begins, where it ends. This is the most important thing I look for. I don't look for reasons. Because each day there is no news. Okay? For example, Facebook today, it has big news. That's why we see a gap up or we see gap down. There is a gap up. Okay? Yes, earning release is a very important thing, not for all stocks. There are just some stocks. I explained this yesterday. There are only some stocks that have analysts that are very famous, that a lot of traders follow. These stocks will have the high percentage of gap up or gap down. But there are some stocks, they have their earnings, but they don't change at all. Up or down, there is no change. Because the people, there is no traders. Okay? There are few traders. And understand that in the market, analysts are following big companies. They do dig into it. They see what's doing, what's new, they always search for something. There are some who are specialized for one company. Okay? Because it is their job to see the fundamentals, to see what they sell, what is the contracts they do. Because the company is always announcing news about what it does. Okay? But in general, for me, I don't follow these things. I follow Facebook. If you go to my channel on YouTube and you see in 2012, I have made a lot of videos, and I will show always when I exit the trades that I have done. But I don't follow the news. I follow the trends. Okay, so that's the deal about the earning news. Okay, so right now, so let's begin, and we can go to what did happen today for Apple in the morning. Okay, so we will see the chart. Okay, so here is Apple. Yes, it is not a big, as you can see. Okay, for me, I sold it. I sold it on the low. The reason for that, when it opens, let's say the 5 minutes. Okay. As you can see here, this is the 5 minutes chart. So the 5 minutes, it goes to 163.33. It was going down. I was there. Excuse me. So most of the time I sell on the open. I always sell on the open, but I was just curious to see if Apple can go more and more up, but it goes down because a lot of people who have bought before, they sold at the open. That's why you see this. So when it was going down, I sold. But later, around 10 o'clock, 10 minutes, it reached 160.23. It goes up again with a reverse. Okay? It goes up from 160.23 to 166. It means if you come here, it means you want to day trade Apple in the morning, and you waited to see where it goes, and you succeed, you can make a lot of money without being here, because from here 160 it goes to 166. It's $6. $6 here. If you can get 4 or 3, you are excellent. But understand, for me, if we have a daily, okay, now for me, I have bought before. Okay, I have bought before. I didn't buy here, but I bought here. And here we have also a gap down. I don't know why we have a gap down here. All the technology stocks, all this what we call maybe computer hardware sector, or it goes like this. I don't know what's going on with the. There is some news here, but it is not earning news. Okay, so it doesn't matter for me. It goes $10 at the end of the day. I didn't get $10. Okay, I didn't get $10. I got $6. Okay, in the gap up. But I have bought it before. Okay, so I am making money from the trend. Now, most of the time, I exit the trade when there is a gap up, and it was a successful trade. And I will tell you why I exit most of the time in the earning news. Now, what if the stock has gone badly from 163 in the morning, it goes to 160 at the end of the day? For example, just a red candlestick it become. So no one knows. No one knows what the stock will be. And since I am not going to do a day trade again, I just sold in the morning and go to do something else. Okay, so this is in general what did happen today for Apple. And if you were here yesterday, you weren't here yesterday. If you were here yesterday, I have explained all after the thing. Now you say, mutual fund usually buy more if the stock drop. No, this is not true. This is not true, because Apple, you know, mutual funds, they don't buy each month or each 15 days. They buy a stock. They have regulations on how to buy. If you say, for example, a hedge fund, I can tell you yes. But see, I will explain to you here in order to understand what's this. So Apple was 233. So does it mean that each red candlestick or 2 or 3 here, like here, it goes $20, $15? They buy. What if Apple continue to go down until $100 or $50 or $10? Are they going to buy more and more and more and more? No. It's the opposite what is going on. It is selling. When you see the trend, this is a downtrend, meaning that a lot of mutual funds or a lot of hedge funds or a lot of investors have been selling. That's why you see when you go to check, see these gaps here, see this one, see this here, see this here, see this here. It is gaps because the people, they sell. They sell. That's why from 233 it goes to 142. Do you understand? This is the opposite of what you say. People are selling, they are not buying. Okay? Now this one here, if it is a good trend in the future, let's say this is a good trend, it will continue in the future. But if it collapses, it will be more selling and selling. So this is for Apple right now, and understand that it was $142. $142. Now it is $165, which is $23 in 3 or 4 weeks, 3 weeks and some. Okay, so this is about Apple. Now we do the same. I will explain right now the thing related to Facebook for today. And as you can see, Facebook has a gap up, and I will just go and show you how the phases that we see on Apple yesterday, we try to see them here on Facebook, and we see what's going on. Okay, so let's go and check Facebook. Okay, so here we are at Facebook. Okay, so at 4 o'clock it was 150.42, and it has gone during the day, it has gone $6.23. And then we see the first phase. After just 4 o'clock, we see the first phase, which going from 150 to 161. This is the first phase. What does it mean? It means just for 10 minutes, the stock goes $11. From 4, after just 4, we have the news, it goes $11. And then phase 2, the stock until it goes until 162.510. It means 1 hour, and the stock has been doing nothing. It means not that much. It's only $1.50 in 50 minutes. But there is a big sale after that from 162.50. It goes directly to 525. It goes to 168. So from 161 to 168. So this is a big move in 5 minutes. It means there are some people who come. But after that, from 5:35 until 8 o'clock, there is nothing going on. People, they don't buy, they don't sell that much, so the stock stays where it is. Okay, so it stays where it is. So this is a very good thing about Facebook, and we will see tomorrow at 9:30 what's going on, and we see if it continues to go up or it go down. And understand, there are always surprises. I have seen before a lot of surprises. That's why for me, I don't wait too much. I always, when there is a gap up, I make a lot of money, I just sell. And understand that for me, I follow trends. I'm not just buying from yesterday, I bought and today I see the news. No. Okay? So I don't buy because of the news. I buy before, following the trend. Okay? So just to get an idea that it can be a down, it can be a gap down also, like we have seen before with Facebook. Okay, so just to make sure you understand that there is a lot of risk. There is a lot of risk here. And you should always be very careful when you buy this kind of stocks, because you can make a lot of money, but you can lose a lot of money also. Okay, so let's go back let's go back to continue speaking about Facebook. So here, when we are speaking about earning news, it is a special kind of news, and sometimes the news can be not just earning news. It could be any news, national news, industry news, company news. It could be anything. Okay, that's why if you are a swing trader, it means you follow trends. You should be aware that there are news that you can't control. Now, the earning news, you know, for example, that Facebook will be announcing the fourth quarter of 31st December 2018. You know the date and you know exactly when, the time. It means after the market close. But if something comes into national news or international news or industry news, this can come at any time. So you will never know. And then when you hear the news, the price has already been changed. So this is why I'm telling you that a lot of people, they don't do swing trading because of the night risk. It means when you hold the stock for tomorrow. So understand now that if you are a day trader, or you are a swing trader, or you are an investor, your goals are so different. The time frame is so different, and the risks are so different. So the risks are not the same. Okay, so that is for Apple and Facebook. But understand that you should, if you like swing trading, you should follow stocks and search where you can find stocks that trend for a long time, and then you can buy them for a long time, for a few days, few weeks, or few months. So I have some trades that it's like 5 months, 6 months, 7 months. So it's not just 1 day or 2 or 3 or 5, because most of the beginners are scared to stay because they think that the stock might go down. Yes, it might go down, but it might continue its trend. And we have seen some stocks that can go 5 months, 6 months, 1 year, 2 years, going up. It means with minor corrections, but they are going up. So if you buy a stock and it goes down a little bit, don't be scared. You can exit and you can wait also. This is another strategy. So don't be scared, because the stock might continue its trend and you can make a lot of money. And this is the goal of swing traders, is to make a lot of money from a stock. You can buy a lot of stocks. The stock that it is going good, you wait and you stay for long. But if the stock doesn't have a trend, there are techniques where you know this. So techniques to see the trend. So this is not indicators that I use. I have never used indicators for trend, or for to buy or to sell or to do anything, or to do the stop loss. I will never use indicators. Okay, because indicators are past information. It means lagging information. They give you information that it is in the past. They don't show you where the stock will be. So most of the people who use indicators, it is just because of this habit. They think that this indicator will help them, but most of the time they don't. The reason for that is that we have more than 300 indicators for different sizes, different things, and there are some people who use a lot that the chart you will never see the chart, because a lot of lines, a lot of clouds, a lot of colors, so you don't understand anything from the chart itself. Okay, so that's why in my training I don't use indicators. I don't use moving averages also, because it is a past information, and this is how I trade. Now we have seen Apple, Facebook, and tomorrow, if God wills, we will see the gap up and we see what's going on. And we have other stocks that we can check this week and next week. So next week, for example, we have Twitter. Okay, Twitter, we have it tomorrow. So tomorrow, I'm sorry, Twitter, we have it next week, not tomorrow. Next week we have Twitter, so we will never know about this stock, how the earnings will be for it, and understand that in general, don't take things as granted that anything you buy, it goes to gap up. It can go gap down, and this is part of the game. Because the earnings have nothing to do with the company, what it does, or the new changes in the industry, or the new changes of the countries, or so. Okay, news just come. If it is good, most of the time we have a gap up, or we have a price change for the best appreciation. Now, if the news are bad, most of the time the stock will go down. It's just because people are day traders. Understand that the people, they come after the market close. Why do they come? They come to see if there is a possibility to buy and to make a trade. So they are not going to stay. So I explained this yesterday and the other day, and I will explain it. Please, guys, if you have any question, please ask until I finish this. Until I finish this explanation. Okay. So as you can see, this is the explanation. I will just try to explain. Okay. So now here it is 4 p.m. 4 p.m. which is the close. Okay. Now this line here is 4 p.m. and it is let's say the price of the stock. Let's say we take Facebook, and it was 150.42. So it is 150.42. This is the price of the close. Now this is 4 o'clock here. After a few minutes, the stock goes from 50, it goes to 161 something. Okay. Let's say we just give the number 161, and then from here it takes 1 hour here. 1 hour, it doesn't go that much, it goes to 162, and then we have a very large phase, another phase, it goes 168, and from 168 it doesn't go that much until 8 o'clock. So here we have 8 p.m. So I have talked to you yesterday, guys, about phases. This is the phase number 1. Why it is very quick? Because in nearly 10 minutes, it means 10 minutes, it means at 4:10 the stock goes $11. $11 in 10 minutes. It is so quick. After that, here we have like $1 something here. This is in 1 hour. It means the traders were scared to buy more because it doesn't move that much, the stocks. So they have been waiting until here there is a big move. There is a lot of people, they come and they buy. So from 162 it goes 168. So this is phase number 3, and this is number 2. Okay, and this is number 4 because there is no action here. It's just some sell, some buy, some sell, and that's it. This is what happened because of the news. And understand that the news here after 4, this is what makes the price change because of the, in general, because of the good news. And this is the phases of Facebook, since we are speaking about Facebook here, not Apple, today, after the market close, which is Wednesday. Tomorrow, if God wills, we try to see the morning what will happen. Does Facebook continue to go up or it go down? Everything is possible because a lot of people, when they buy in the morning, they sell, so the stock will go down, but we will never know how much it will go down, because whenever it go down, it go down, people who have bought before, they will lose their profits. They lose a lot from their profits. But if the stock continues to go up, okay, and you see that I always say that there are some stocks like Apple, like Facebook, they are very, very volatile stocks. It means they go down so quick and they can go down so quick. So be careful when you buy these kind of stocks that are so volatile. Okay? Now, so this is for Facebook, and we have seen Apple. Tomorrow, I will be making other videos about Facebook and how it goes during the day, and understand that there are thousands of companies that have earning news. So if you want to, if you like risk and you like volatility, you should see stocks that are very famous, that have analysts. Okay? Because there are some stocks, they don't have analysts. That's why you should see the volume is so low and no one is interested to know what these companies are doing. Because understand that it is not Facebook that makes the gap up or gap down. It's the traders who come because of this news, and they know that they can make a lot of money in few hours. Okay? They can make a lot of money in few hours. This is the most important thing you can think about. Now, if you, let's say you want to check, there is a calendar of earning news for stocks. So yesterday we have seen the calendar. You can just put on Google earning news calendar. So I will just, we did it yesterday. So it is stocks earning news calendar. We have one by Yahoo, which is very good. Okay. Yes. So let's go and check this this calendar here. Okay. So as you can see, these are the calendar, and because today is 30 January, Wednesday, we have 128 companies, and as you can see, next day, which is Thursday, 31st, we have here, you see all the companies in blue on the left side, and you see the name of the company, and you see current call time. It means if you there is other services, you try to search for them, and they will show you in order to listen, or you can see some TVs or some websites, or you can call the company and you get when, for example, the call will be in order to listen to it. If there is a for example, TV or something, they can't cover all the stocks, but they cover mostly the most important ones, or after we have the news, they see which stocks have been having the biggest or the highest gap up. Okay, so this is what they are interested in. So for you guys, if you are interested to know these companies, for example, Amazon is tomorrow on Thursday, and it is after the market close, and the EPS, it means earning per share, the analysts say is $5.67. Okay, this is the most information that you need. And then if the company reports the EPS, if it is better than $5.67, $5.67, it might be having a gap up. If it is lower, maybe we have a gap down. And you always see the chart. For example, you see the chart in order to know that this company has gap up or gap down. You should see its history, okay, to understand well. Now, let's say you are interested to know, let's say Twitter. You put Twitter. You click that, okay? So, a Twitter is on the 7th February. It means next week. And it says here 1 p.m. So, what does it mean? Okay? So, what does it mean? It means that here it gives you the exact time. So when you are at February 7, you wait at 1 p.m. and then the company announces. So after 1 p.m. you will see the company announcement, and they report it here, and then you see if it is above 0.25. Okay, so if you want to know, for example, later what did happen later when the company announces, like this here, for example, Facebook beats first quarter expectation. You can click on that. And
Facebook is coming out right now. Brian Sazi.
Okay, so you see here, for example, in this when they announce Yahoo Finance, they always speak about the biggest stocks. Okay, and as you can see, let me see here, they give the social media giant earned 2.38 per share, which was higher than the 2.18 per share that was anticipated on Wall Street. So here you see, in general, the information. In Nasdaq, it says 2.17. I see it yesterday. So you can see. So analysts, or it means Wall Street, they say that Facebook can get 2.18. But Facebook said that they have made 2.38. So you see, 2.38 is better than 2.18. That's why this created the bull event, and that's why the people, they come and they begin to buy. Okay. And this story, they give just prices. As you can see, they give data always about the thing. And understand that this creates news here. Okay, so people who are just watching TV at that time, if it is the company itself that speaks about the thing, okay?
Have you had a chance to look at the Facebook numbers?
Yeah, they're definitely coming hot and heavy here, Jen. Looks like an initial earnings beat by Facebook, $238 per share versus $218 per share consensus forecast. Revenue above estimates too, $16.9 billion versus $16.3 billion. Two key things to look in here. The daily active users at 1.52 billion, slightly above estimates of 1.51 billion, and the monthly active users 2.3.
So, as you can see, 150.09. So this is where
2 billion, relatively in line with forecasts. So initially, you got to get through this release.
They have to do.
She continued to be on message.
Yeah, exactly. No, it's just kind of amazing the way. So financially, the business is.
Just so we get the head count number out here, head count 35,587. That was at the end of the.
I think you really, you have to at least.
Represented approximately 93%.
Oh, it's interesting that. You know, and there's still the headroom. You know?
Yep. So we are continuing to watch the move in Facebook right now, up just about 7% at its highs after its earnings beat.
Welcome back. Now this, Facebook under fire. The social media giant reportedly looking to combine all of its messaging apps. That includes.
Okay, so as you can see, a lot of news about Facebook, and the most important thing is this quarter expectation. It has been met, so the stock soars and it goes so high. This is the main thing that you can retain about Facebook, for example. Okay, so if it is the news that it is coming from the company and they are speaking, this is the most important thing you should watch, because it gives you hints on where the stock will be. But in general, the whole market is up for many weeks, and I have said this in each week that the markets are strong, but the news has nothing to do with the market. Sometimes the market is weak and the news are good, and sometimes the market is good and you see the stock collapse because of the news. Okay, so this is how to search for stocks. If you want to, any stock that you even if you don't know the stock, I will show you a way to know if these stocks are volatile or not. Okay, so what you should do is just look at the history of the stock now, and check if this stock has gap up and gap downs. Most of the time, always when the trend is going up, most of the time it's gap up. When it is going down, sometimes we have more gap down than the thing. So if you take, for example, the chart, okay, so you can see the biggest here. Now look here in the chart of Facebook. You see a gap up here, but you see the biggest gap down ever for Facebook. It was 218, next day it collapsed to 173. It is one of the biggest. You know, I was here in this trend. I took all the trend, and I got caught into this gap down, and I exit. Although I lost a lot of my profits, but since I bought it before, so I have still some profits. But I didn't lose money, my principal, but I lose my profits. Okay, that's why there are many techniques you can do in order you can sell half of your shares, or you can sell when you have a lot of money accumulated. So listen, if you are going to have all this money here, let's say from 155 to 218, it's a lot of money in the trend. And we have a gap up here, but we have the biggest. This is something that it is new and it has never happened to Facebook. Understand that, so it's a new thing. Now, even tomorrow, when we have the gap up, let's say here, or let's say 168 or 169, it is a good gap up, but still, it is not as bad as this one, which is the thing. And understand that each earning. So when you see, if we take, for example, Apple, okay, you can see here we have a gap down, here we have gap up, gap down. It means you can see that the stock, here we have a gap up, here we have a gap up. You see that? So you understand that that always in earnings, if we take, for example, Amazon, okay, Amazon, we have here a gap up, here we have a gap down. So it's always having a gap up, a gap down, and it's always very, very volatile. Okay, we have Tesla also. You see a gap down, and sometimes we have a gap up. So it is the stocks always we have volatile gap up here, another gap up here. So always we have. So for you, in order to check for the earnings, you should find stocks that have gap ups and gap down, at least if you want to try and to trade them. Okay, so but stocks, there are thousands, and for me, I prefer to buy stocks into a trend. I do swing trading. I usually don't do day trading for the news. But if you are a day trader and you are interested to do day trading, you can do that always. So as I told you before, this is how you can search for stocks for the earning news, because this is a major event that you should be aware of, especially if you are having the stock for a long time, like me, for doing what we call swing trade. It means you follow the trend. So sometimes if you are scared to stay, you should take precaution either to sell everything, all your shares, or to sell half, or to sell whatever you want and leave some, if you want to bet on the stock if there is a gap up. Okay, so it is always your choice. It is not the market that it will tell you what to do. It is you who you want to take decisions. That's why if you are responsible for your money and you take care of your business, you should see what is good for you, because the market, it does what it does, and it gives you the price that the people agreed on because of the demand and supply. When there is a demand, a lot of people come, they buy stock, and you see that the price will be raised and raised and raised because of the demand. If at the opposite side we have a lot of sale, a mutual fund or hedge funds or investors, they heard bad news, and each day a lot of people, they speak about bad news about this company, so the people began to sell and to sell and to sell, as it happened to GE before, and as it happened to other companies that they go to bankruptcy. Okay, so when you see a stock, it's always you see the trend, where this stock is going. Is it going good or is it going bad? And you can see that very, very clearly. So I can give you examples. For example, in the past, these stocks, I have been trading them 2010, 11, 15, 17. They were so good stocks. But recently, 1 year, 2 years, 3 years, these stocks collapse. Okay? Collapse because they begin to lose business. And this thing you should always see in stocks. For example, I give you, maybe you have shopped at some of this. Let's say, Giuseppe, most of you, I know, maybe you know the thing. It is $1.27. Do you know that this company, Giuseppe, okay? Do you know how much it was in the past? In the past, this stock was 87 in 2007. Okay? So from $87.18, it goes to 1.27. So what makes this stock goes so bad like this? It's just because it loses business. But before it was doing good, then 3 years bad, then 4 or 5 years good, 2 bad years, 3 good years, 2 or 3 bad years. But understand that the stock 87, now it is 1. Those people who stay too much, because for me, I don't do investing a lot, so I should exit the trade at certain percentage. I will never stay with a stock like this. And maybe you have heard also about Sears. Let's see, this one. No, not this one. We have another Sears. You know, the company has been. Is this one? I think it disappeared. Ah, yeah, it could be this one. Yes, this one. The stock was $195 in 2007. So this is the beginning of 2000. They go bad before the crisis of 2008. You know that in the market, 2008, almost all the stocks go down. But these stocks have been going 1 year before and doing so bad. Okay, so here from 195 it goes to $102. It means nearly 50% has gone in 1 year. And then we have the bad year of 2008, 102 or 114, it goes to 38. So what does it mean? It means it lost about 78% just in 1 year. And then it's going down, and now it is 46 cents. Do you understand? It was 195, 2007. Now it is only 46 cents. So those people who are investing and they stay with the stock, it might go up, but the stock continues to go down, because all this, it shows you how the people exit. The good people, when they hear bad news and the stock begin to go down, the good people, they have exited here this year. The other people here, the other people here and here and here, until those guys, the owners of this company, the stock is 46 cents. Okay. Now, as I told you before, it is not just the news that changed the stock. It can change in the event of the news. Okay? It will change on the event. It means when the event comes, the price change. It's just because the traders will react to some stocks and do something, either buy or sell short, depending on the situation. Okay? And when the stock is going down for a long time, this, you can see it with the price without going to fundamentals. And this is one of the best things you can do, because we say that the price does not lie, but the people, they lie. Okay? It means the company, he can say that the company is doing good and we are good, and we have other investment and we have little debt, and he can say what he wants to say. Okay? Because he can say we are going to a bankruptcy. He can never say that, because all the people will sell the stock. It was $100, tomorrow it will be 1 cent. Okay? So understand that the CEO of big corporations, big companies, they can't tell just the truth 100%. They always say that there is a hope for the company to do this and to do this. But people, for example, mutual funds, they begin to learn first. Do you know why? Because understand, a manager in a mutual fund, he has a lot of analysts looking for the stocks. If there is any, if he see that some stocks are not doing good, they do some investigation and see what's going on into the company. Okay? If the company is doing, for example, something bad, they will know it this month, next month, or the other month, or the next year. They will know it, because the price, when it is going down, the people who are selling, they are hidden. Okay? You will never know. How do you know? But the people who follow the major holders of a company, and let's say he makes a copy of how many shares they have in certain time, let's say in the beginning of the year, and after 6 months or 8 months, he will see how many shares they have right now. Do they buy more or do they sell? It's very simple. If mutual funds begin to sell and you see their size of the company is shrinking, what does it mean? It means that this company is not doing well, because a lot of people, they do some kind of investigations about the company. It's not they just see if the company is really making money, and they follow the quarters, they follow what is the debt, because the company give a lot of information. But sometimes this information, it is too hard to understand. It's only the people who are specialized, they can understand a lot of numbers. because the company can hide some numbers into other kind of numbers. They can do some play, and it will never show. Another thing is that a CEO cannot say something bad always about his company, because it will lose customers, it will lose investors. And when a company loses customers, it loses business, it loses investors, and the company will shrink and become smaller and smaller and smaller. You see, I showed you right now Sears. I still go to Sears, to JCPenney to shop. It's the same thing, but they lost business. One time you go to this company and you don't find it. You find the store empty. And this, I will tell you a funny story. A funny story that happened to me. I used to, before, to go to a bookshop. Okay? So what I do is just, I select some books, I go to its cafe, and I drink some coffee and put some books and just read. Just it is a habit that I did when I was young until now. I always read. So it's always like this. Now one time I go to this cafe and I enter, I don't find the books. Most of the books have been taken away. And I saw encyclopedia, other books, shelves, everything is for sale. And I asked, what's going on? They told me, oh, you don't know? It go bankrupt. So this is why I told you guys that for me, I don't follow news a lot. But this company wasn't in the stock market. It means I didn't buy this company or so. Okay, because most of the time when the stock goes too much down, like I showed you right now, JCPenney or Sears, it could be going to bankruptcy. But the people, especially beginners, when they see a small stock, they don't see where it was in the past. They see now, oh, the stock is $1.50. It's JCPenney, it's a big company. Okay, let's buy this $1. It can go to $10 next year. But they don't know that this stock was $10 before. They don't know that this $1 can go to 1 cent next year. This is the ideas that I develop with you, is that companies with events, with the follow of the history in the trend, you should understand a lot of things about these companies. You know, understand that a company has a relation to its stock, but it is not really related to it. Because who decide for the company? It is the CEO and the executives who decide what we want to do, to change the plans, to change the strategies, to change marketing, to change products. This is the executives who do that. But in the stock market, it is the traders who play with the stock. It's not the company. The company has no reach on its stock. Okay? So that's why you see yourself, you say, oh, why this is a good company and we see that the stock is going down? It's because the traders have been selling short. I don't know what is the reason, for whatever reason they have. And that's why you see that the stock, it is not really the company itself. And a lot of people, they mix the company and the stock. And whenever there is something that happened to the stock, oh, they say, oh, it's because this of this. It means they want to find a reason. And that's why, in general, you find TVs, most of the time, it's for entertainment. But people, they think that TV can give them information that they don't find, which is not true. For example, when the company announces, okay, if you are following this company, You can even call the company and you say, when do you have your conference call? And how do I listen to it? You can do that. You don't need CNN. You don't need CNBC or Bloomberg or any website. You should only need when it will happen, and you find it available in websites. Like I have showed you Yahoo Calendar. You find when it is with the time, and just you follow and you stay. And you can do a day trade, you can do a swing trade, you can do whatever you want. So most of the information that the TV gives you, the company has announced this news. It is just they put it in TV in order to attract people. And you think that this TV has made a lot of work to bring you this for free. No. Okay? You go to any website, to any company, there are a section that it is called press release in any website of any company, and you can read just in general. You read what this company is saying. It could be the news each day or each week or each month, depending on the news they have. And understand the price. It's always the traders who play with this price. Okay? The reason for that is that if you go to 1 minute chart, like 1 minute you see the chart, candlestick, why the people are buying and selling? In each minute, each second. Why? Do we have news? No. Because all the people who are doing price trading, like day trading, like scalping, like swing trading, they should see the price more than anything else. And anything can happen with the news. This news, it is just a help to see if this news will make the stock go up or go down. At least you can take action and either to buy or sell short. Okay? So now it is 11:17. We have 1 hour 17 minutes. So please, guys, I will continue speaking about something else. So if you have some questions about what we say about earnings or about the company and its stock, if you have some questions, please just ask questions like Simaradi83, who has asked some questions. So if you have more questions, please ask, because whenever you ask me a question, I will develop this, and I will give you more information about what we say. So, since we are speaking about earnings and about company earnings and how much it makes, okay, so we can speak about something else related to this subject. Okay, so right now I will try to explain to you the difference between EPS and the dividend, okay, and do you know the difference between EPS, which is earning per share, and the dividend that the company gives? A lot of people, and even when you go online and you search for what is a dividend, they always tell you that it is a cash payment from the company earnings. This, although it is true virtually, but in real it is not. And this is I always speak about. Okay? So, for example, if we take, let's say, earning data news for Apple, I will just give you what is so let's see here. Apple today announced financial results for its fiscal earning per diluted share of 4 from the year a quarter and a quarterly earning per for. Okay, so if we can see, Apple earnings, okay, if you can see that. So Apple today announced financial results for its fiscal 2019 first quarter ended December 29. The company posted quarterly revenue of $84 billion, a decline of 5% from a year ago, and quarterly earning of 4.18. So although there is a decline of 5% from year ago quarter, but we see a gap up. Okay, so do you see that? Now it says 4.18. Try to have this number in mind. 4.18. Okay, so I'll just give you an example to understand the difference between okay, 4.18. This is the earnings, okay, of the fourth quarter of last year. Okay, now so if you go to a dividend, okay, so let's go to the dividend right now. So see the dividend. Apple's board of directors has declared a cash dividend of 0.73 per share of the company's common stock. The dividend is payable on February 14th to shareholders of record as of the close of business on Friday. It means if you have owned Apple before February 11, you can get this 0.73, and this is what we are going to speak about it right now. about the dividend and about okay, just to get an idea about how things are not the same. Okay, so let's go back in order to see the explanation. So as you can see, guys, you can see now the earnings for the fourth quarter of Apple, here we are speaking about Apple, is $4 per 0.18 per share. Now, this is in real. In real, it means they bring the earnings like this, and they divide by shares. You will find 4.18. But when this is in real for the company itself, from the real earnings. But when they want to give a dividend, they give only 0.73 per share for you guys, by share, only one share, for you guys who own, okay, who own Apple shares by the 11 February 2019. Now, why why there is a difference? Why the earning of the company? Why they don't give us $4 per 18? Because this is real. Now from where do they give this dividend 0.73? Do they give it from, they give you a cash money from the real earnings from Apple? No. This is the thing that most of the people, they don't understand. It is no. 0.73 they will take from the stock itself. Let's say the stock is 168 before the close. After the close finish, in when they give the dividend, minus 0.73. Okay, so 167, okay, 27. This is what the stock will be after the market close. Now you ask yourself why. It is because the dividend is taken from the stock itself. It is not taken from the real earning from the company. They send you a cash, yes, they send you. It means they send you $73 if you own 100 shares. You will find it in your account when they send it. But this money, understand that this money is yours because the stock was 168 and they took 0.73 and 167.27 is your money, which is 168. It is just a trick that Wall Street do to think that you are taking a dividend. You are taking from the real money of the company. It is not. You are taking it from the stock. If the stock stays the same and they send you $73, it's very good. Okay? But you will see that they cut it from the real price in the stock market, because here is the stock market. Here is the real thing. Apple has made $4.18 for each share. So why Why they don't give you $4.18 to each share without cutting the dividend from the... And this is the trick that a lot of people, they don't understand, and a lot of people, they continue. And I have seen before a channel, someone who is telling people how to invest in dividend, but he misled them because he himself, he doesn't understand the dividend, how it is taken. It is not taken from the company. It's taken from from your stock. It means tomorrow you will see the stock at 167. It can go up or down depending on, but after the market close, it will be 167.27 cents because they took this and they send it to you to your broker. And you think you are really happy that you get $73, but $73, it is not something that comes from them. It comes from the stock. So you understand that. This is the real. Now, I will show you by the proof that the earnings that the company has, you don't get you don't get any cent from this earnings. I will show you why. Okay? Now, let's forget about the dividend right now. The dividend is in the stock market, and now I'm not speaking about stock market. Okay? So I will just try to see, guys, if you have any questions. So I don't see any questions, so I should follow. So right now, guys, I will give you the proof that the company gives money without having or without owning shares. Okay, I will show you. Suppose that you are a worker at Apple. You work for Apple. Let's say you have a 401k. Let's say you put $100 each paycheck or each salary, and let's say Apple match $100. This $100 that you see each paycheck, because you contribute to 401k, ask yourself from where the company gives you this $100. From where? You don't own. So here you do not own Apple. You don't own Apple shares in the stock market or whatever. You don't have. You are just working for Apple. But you understand that if you put $100, for example, they match 100%, they will give you $100 without owning shares. Now ask yourself, if you are working for Apple or Walmart or Costco or any company, it doesn't matter. Now this 100% is coming from real earnings of the company. It's the company money. It's the profits. And they share with you. That's why it is called a sharing plan. Sharing plan. They share with you profits. Okay? Although you don't own Apple shares. This is a proof to show you that the real earnings, it doesn't go to shareholders. It means people who are in the stock market. But it goes to people, a lot of money goes to people, to those people who work for the company. And mostly the executives, they get a lot of money. They can get hundreds or thousands of shares of Apple just for free, because it is their bonus. It is their bonus, or it is sharing 401 sharing plan. They give them free shares. This is from the earning of the company. It is not, okay? It is not dividend that the other people are speaking about. So this is a proof. If you are working in a company, whatever this company, and you have a 401k, you try to see that if you have a 401k, they give you money, but even if you don't have or you don't own shares. Excuse me. Okay? So this is just to show you common myths that the people think, but they don't know that it is not true. If I am a shareholder and they give me $4.18 for each share as the earnings for true, I will be happy with that. But here they give me only 0.73 cents, so it is too little, and it is from the stock, as we have explained before. Okay, so this is just to understand that the company is something, and the stock market, it is something else. They are different. Some people they have a relation, but in real time it is not. So whenever you in the future, whenever you hear this word, and I will give you, for example, right now I will show you for example, what did they say about dividend, and you should understand. Okay, so let's go to Chrome, and you can see right now I will show you what do they say about the dividend explanation. Okay, so we say a dividend is a payment made by a corporation to its shareholders, usually as a distribution of profits. When a corporation earns a profit or surplus, the corporation is able to reinvest the profits in the business and pay a portion of the profit as a dividend to shareholders. Now, if I ask you the question, these dividend that they speak about here, okay, is in the stock market, not as a worker, when you are a worker for Apple or for any other company. Okay, so when we say earns a profit or surplus, the corporation is able to reinvest the profit because the company needs the money, that the real money here. Okay, the real money, it needs the real money to do the operations of the company, and pay a proportion of the profit as a dividend to shareholders. This dividend is taken from the price, not from the real earnings of the company. Okay, and the company sometimes it can stop the dividend as it likes, because dividend is not something that it is obligatory for the companies. Okay, so that's something that you should know and understand, that sometimes companies they raise the dividend, sometimes they increase it, sometimes they decrease it. It depends on the company, what they announce each quarter. Okay, now hello Bassan, how are you? You come late. It's 1:39. We have about 21 minutes. Okay, no problem. Good evening, Kareem. I am sorry, I am very late. Okay, you always have fun first with your friends and with your family, and then you come late here before you go to sleep. So, but I already have question about what you are talking about. Okay, so please, guys, because we have around 20 minutes and we end the session. The session is 2 hours. So, Bassan, please write your question right now, and I will try to answer it tonight. And tomorrow we will continue our discussion with another subject, and we can. If you come early, you can ask more questions. Okay. So please, if you have a question, ask. We have about 19 minutes left for this session. So just ask your question. And I have been speaking about the earnings. Since we are in speaking about earnings, I just try to show you the difference between what we call the earnings per share, which is EPS, and the dividend they gave, the company gave, and what is the difference. And I said that the earnings per share is the real one of the company, what has made the earnings of the quarter, and it is divided by the common shares or the outstanding shares that the company has, and then it is $4.18. But when the company wants to give a dividend, this dividend is not from the real earnings of the company. It's not from the earnings, it's from the stock itself. And this I have explained many times during videos. And the thing is, people, they don't understand that it is their money. So Bassan said, today after the market closed, the broker sent me an email saying that they had changed my stop loss order and that they had for another stop loss sales order with lower amount because the dividend paid today. Listen, I don't understand. The dividend comes after the market close, and your stop order doesn't work because it is a stop order. They can't change it. They can't stop it if it is for 1 day. If you put it for 1 day, you don't put for. I had a sale order for 38.40 and they changed the to 37. No, listen. What you are saying, I don't understand. You should because you should give me what you did today. So I don't understand. A broker cannot change your stop loss. He can't. You mean you sold your stock with 37.80, but he can't change it. Okay? So please, can you give me more information what you did, because I don't understand. Yes, you told me they changed, but I don't know what you did. They can't just change it. So, okay, tell me, this morning, what did you do? And this is I just their email. Yes, yes. You know, you told me what you what they say, but I don't understand what you did. Is it stop loss or is it what is it that you did in the morning, and when did this happen? I did not do anything. I did touch in the order. I didn't touch the order. Yes, but your order. What is your order? Is it a stop order? It means you should tell me what you did. It means you bought a stock. It could be any stock. So, do you have a stop loss or a limit, or what do you have? You know, this change. You say stop loss. A stop loss doesn't change. So you should tell me all the information to understand you. Okay, you have a stop loss since yesterday for 38.40. Good to cancel. Yes, that is very good. Now, when did they change your stop loss? It means during the day or after the market close? Oh, you will have to send me the information to my email. Yes, thank you very much. So I will be Bassan. I will be with you after we finish. Yes, yes, I know you will send me the email, but you tell me what you did. It means you did a stop loss with good to cancel. Understand that the stop loss is working only during the day for 2 months. So I will just make sure you understand this, and then we can explain more and more. So please check this. So you said, for example, just to make it sure you understand, that 38. What do you say? 38.40. This is your stop loss, and you did it for GTC. It means good to cancel. It means it will stay 2 months for this stop loss. Now, this stop loss is working only from the open to the close. With this, from the open to the close, it doesn't work before or after the market close. It doesn't work. Now, you say that the broker has changed it to 37. And just 2 hours, I received an email from them saying that because of the dividend paid and the stock, they replaced by themselves by order for a new order of 37.80. Oh, okay. So I think I have understood. It means, so what they saying, for example, the dividend, I just speak about the dividend. They give you a dividend, okay? They give you a dividend, let's say $1. But let me know how much the stock was at the close. At the close, try to check the close and give me what is the price. It should be maybe 39 or 40 or something like that. So you should just give me the close, and I will explain to you what did happen. So I think, in my opinion, I think that you should give me the close, the stock close of today. Because you put the stop loss, okay, according to the price of yesterday or today. So they change it because the stock goes down, let's say $1 or $2. This is the dividend, because I just explained to the guys that a dividend is cut from the price at the close. That's why if they cut $1, maybe your stop loss will be the same as your price. So if it is the same as your price, you will exit in the next morning. That's why they put it down, in order not that you exit from the stock. So you can change it. You can change it now or in the morning before the market open, before 9:30. At 8 o'clock or 8:30 or 9, you can go and check where is the prices, and you can change whatever you want. And it will be applied, because when you change it by yourself. Okay? So I understood what's the problem. The problem is dividend. But in general, for me, I have never seen a broker changing the stop loss. Never. I have never seen that. It's something new. Okay? Okay, you will check it. I will check as soon as you finish this session. Yes. We have only 8 minutes. This is as I told you, it's just because this is the second time this week that happened. Is it because of earning also? Is it the earning also, or is it another thing? And what is this broker? What is this broker that you are speaking about? Oh, it's about earnings, so it's the same thing. Because I understand that the dividend is cut from the price. It's not from the company. I just try to explain the guys here the situation, and I told them that a dividend is cut at the close and the price will change. But later the stock can go up or go down. This is TD Amitrade. Okay. So for me, I have never seen that the broker will change the stop loss because of the dividend. Never seen that. But maybe they have a regulation for themselves, a rule that the stop loss will change according to the dividend taken. It could be. But for me, no, I have never seen this. So when we finish, you can send me an email and you send me what did happen. I know what did happen right now, but I don't know the reason. So you should, for example, tomorrow ask them, even if it is the dividend, why they change without your permission. Because it is you who put the stop loss. Stop loss, it is your risk. It's not their risk. So you put it wherever you want. But they can say to you, the good thing, if they are good people, they can say to you that the price dropped because of a dividend. So this is an alert if you can change your stop loss. This is good. If they send an email like this, it means it's very good because they care of you and they tell you to look where is your stop loss because the price has changed. Okay? Oh, it means see. It means you are speaking about in the morning or you are speaking about after the market close. So now you confuse me. Okay. So listen, what you should do, because what you should do, Basan, tell me what you did from yesterday to today. Tell me what you did and send me the email of the broker. I will check. Because first I should know what did you do you yourself. Because you say you changed the price to the old stop loss. I don't know what is this old stop loss. And if they shorted the stock, okay, it happens. Right, I was stupid and I didn't understand it. Why? And got out. They changed after the market closed. Okay. But everything can happen. You know, Bassan, for me, I was on Facebook and I got a Gap app. so like yesterday with Apple, I got a Gap app of Apple and they sold it. Today, I have a Gap app of Apple. Tomorrow in the morning, I will sell it in the morning. So, I don't know. I don't have stocks that have dividend right now. Okay? But just explain to me step by step what you did yesterday and today and what did happen, and I will see the chart and send me the email and I will help you as usual. Okay? So as you might see, earning dates are very important, and things can change to the good or to the bad. Facebook, it seems excellent. It seems excellent right now. Tomorrow, I don't know. It's better than Apple. Apple, it goes $10. And for me, I get only $6 or 6 something. Because I sold it at the low when the stock was going down. I just decided to exit. I always do for selling at the open. So I was just waiting a little bit. I see that the stock doesn't do good and it was going down until I take the decision to exit. Now when I exit, after 5-10 minutes it was going up, and this is how things happen. It happens always, because when I sold my shares, I am out of my PC, my computer. So I didn't check later what is going for Apple. If it goes down or up, it doesn't matter. I am out. Because understand, guys, that when you take a decision to do something, it's okay. But understand that I bought Apple and Facebook. I bought them weeks ago because I follow the trend. I didn't buy them yesterday. For example, Facebook, I bought it 2 or 3 weeks ago, following the trend, like Apple. So when I have the Gap app, I made some good money, so I exit happily, and I will see the following days or weeks. If I see that Apple and Facebook are so good, strong, I will buy them again. And this is just a game. As you know, it's just a game. You should follow the price wherever it goes. Now, there are a lot of, as I showed you today, if you want to see other stocks earnings, you can find a lot. And you can see just stocks earning calendar. You put that in Google, and then you find Yahoo calendar, and you find all the companies day by day. And if you want to try or to do something else, if you are going to do day trading, because in general for me, I don't day trade the earning news, but I follow stocks for the long trend. and this is what I do. Sometimes it is good, like I get Facebook and Apple for this week, and sometimes it is bad. You get a gap down and you lose some money, which is normal because you are risking your money. And if people, they don't risk, they just watch TV. This stock got a gap up, this stock got gap down. If you are just watching, this is called entertainment. And I am not here in the stock market to do entertainment. That's why I don't watch TV a lot, and I don't follow this news because it will change my opinion about the stock. Sometimes they tell you, oh, this stock is good, buy, buy, buy. If you follow them, and then you find that it is just a trick, and this stock will be going down and you lose a lot of money. Okay? So understand that this is the game. So, since now it is 2 hours, and be careful, guys. Tomorrow at 10 p.m. we will have the same session at 10 o'clock p.m. And on Friday I will be on YouTube at 10 p.m. as usual, because YouTube, I do it for a long time, for more than 1 year or two. Each Friday or Saturday I do a live. Okay, so thank you very much for watching, and please, if you have more questions, have your questions ready for tomorrow, whatever you want to ask. Sometimes we have to ask whatever questions, or if you have a problem or you don't understand something, please just have your questions ready, and when we begin the session you can ask your questions and I can answer the questions. Okay, so thank you very much, guys, and see you tomorrow.